We all human beings worry about one important thing: dying too early and living too long. Yes, retirement is one of the most important financial goals, and we all should spend considerable amount of our wealth and time planning for it. Thanks to a lot of YouTube videos today, many investors are planning their retirement good. They now know the importance of asset classes, the allocation that they should follow. In this video, I talk to you about 4 important aspects of retirement that you should definitely know, that can help you plan your retirement and also plan your post-retirement life better. Please do watch the video till the end. The first point is about an asset class that is very important for your retirement life. Yes, it is equity. It is an important asset class while growing your portfolio, but there's a misconception that once you retire, you should have 0 to 5% of your money only in equity. I'm dead against it. I'll tell you why. Retirement is not a short tenure goal. It's a long tenure goal. You spend about 20, 30 years living in a retired life. That's not small by any standards, and that's the reason why I insist that you should have a lot more in equity during initial years of retirement. While I understand equity is volatile, it goes through lots of ups and downs, but if you could manage withdrawing those retirement amount or the retirement income from other asset classes during the initial years of retirement, it will help you avoid a lot of retirement related mistakes in the later years. Yes, therefore I think the notion that equity should be 0 to 5% post retirement should go away. You can have as much as 30% of your retirement corpus in equity. The second important asset that you should focus on and change a little bit is debt. Yes, a lot of people consider fixed deposit as the only option post retirement. I think instead you should look at a lot of debt investing mutual funds in your portfolio. Let me tell you why. If you invest into a fixed deposit or some private placement bonds, you are going to go through something called credit risk, which is nothing but ability of the bank or that private placement company to give you the money back. What I'm suggesting to you as an alternative is a debt mutual fund that in turn will invest or lend their money to central or state governments. There is no credit risk after all. It's sovereign bond. There are 2 benefits to it. In addition to avoiding credit risk, the yields tend to be slightly better than FD. And the second and the most important point is, if you hold on to these mutual funds for 3+ years, your taxation slab comes down drastically. The returns that you make out of these debt mutual funds are taxed at only 10% post 3 years. There's a huge amount of savings, right, in terms of taxes. Therefore, I think you should immediately look at changing your debt portfolio and invest a lot in government-oriented debt mutual funds. The third most important aspect is taxes. Literally no one likes to pay taxes, and especially after you're retired. Therefore, I think you should do tax loss harvesting extensively for your benefit, which is nothing but using your unbooked losses, whether it is short term or long term, adjusting it against the gains that you would make for the next 7 years. I've done an extensive video on tax loss harvesting. The link to the video is in the description. Please do watch it. The fourth and the most important thing that a lot of people miss out is medical insurance cover. I know there's a general misconception that you should focus a lot on life cover than medical cover, but on the other side, your life worth keeps coming down as you grow older. But then the cost of medical expenses can be a huge drain on your retired wealth post your retirement. Very recently, one of my clients contracted a deadly variety of cancer and he had to pay 30 lakhs out of his pocket, primarily because he was covered only for 10 lakhs of medical cover, in spite of me telling him to increase it. You don't want this situation to happen to you. Therefore, my request is please increase your medical cover as much as possible before you retire. If you really want to know how to increase your medical cover without paying additional cost, write to me. I hope you like this video. Thank you for watching. Good luck, happy investing, happy retired life.